the last two topics, and that would be VAT and budgeting. Of course, by now you're all writing exams, and I wish you all the best and may it just go better even than you expected. The first topic will be VAT, and it's just a quick summary or revision again. I'm going to only do activity 1 with you. There are 3 activities, but there were videos recorded earlier this year, I think in July, where the whole VAT topic was done from what you started learning in grade 10 to grade 12, and that would include calculations, ethics, internal control, problem solving. So please make sure that you find that video, that you go over that as well, and that you are well prepared for paper 2. This will, of course, only be in paper 2. We start here. These are your notes. I'm going to do, like I said, activity 1. So I hope you have that in front of you. I'm going to do the calculations on the paper here. You should be able to see it clearly. But we first go to the slide, where I just want to remind you again, please, that this revision poster is perfect and it gives you everything you need. You need nothing more than this. I must also remind you, please work from this and no longer from your textbook. Textbook can be something you refer to if you're unsure. But these activities here for term 1, 2, and 3, of course, term 1 is just for paper 1. And it includes companies and fixed assets. But term 2, and I just want to get my laser pointer here. And then, of course, term 2 activities and term 3 activities, which I'm doing today, has got everything you need for paper 2, and this video will be loaded as soon as possible. Down here, please don't forget about the revision pack. And I really hope you all have that, because the core notes in here are brilliant. And when you read through it, it just gives you an indication if you still are on top of what each different topic is about. And it has many good questions in. I am going to go, I'm not really going to go over it. I just want to tell you that on your pack for today, it gives you the basic concepts about compulsory and voluntary, zero rated, etc. You have to, of course, with calculation, always answer, is it payable or owing to SARS? That would be a credit balance, or we owe them. Or is it receivable from? So don't just end with an answer. Make sure you say who owes who. And if output VAT is more than input VAT, in other words, the VAT on sales are bigger, then we will owe SARS the difference. And the opposite, of course, when our input VAT that we claim back is bigger, this will be receivable. You will see in activity 1's calculations that it's very easy. You want the VAT, which is 15%. But when it's exclusive, you will divide by 100. And if it's inclusive, you divide by 115. And I'm sure you all know this very well by now. They give you on the first page just a summary, so please go over this yourself, where we again tell you when will it be a plus or a minus in your calculations. I prefer to do brackets when it's a minus. You're welcome to do that. If you do make a minus sign, please just make sure it's clear and big enough, and go over all these options. I'm starting with the first activity, which is, of course, on VAT. The first thing I want to get a highlighter for us that we notice is the topic, so that your brain can kick in and you think about VAT only. Then the minutes, so when you sit at home and you practice this, 15 minutes. I'll do it faster today, probably. That's the idea, because you can pause the video anytime, but we have limited time here in the studio. You need to know who we're working for. We are the bookkeepers of Alba Supplies. This is what we sell, music equipment. Immediately you know this is VATable. They are also registered. And it is periodic system when they want to combine VAT with something else, which they are going to do, and then we use 15% because it's a new exam paper or question. Right, when they start with 1.1, calculate the weighted average. You might think, what's going on? This isn't VAT. Remember, they can combine topics. So you know that this FIFO weighted average and specific identification method is all about stock valuation, also paper 2. So we first just do this. You'll see how the VAT comes in question 1.4, actually earlier on as well. So always be aware that when you use figures for our calculations like cost of sales and gross profit, that it must be exclusive. Okay, they want it per sound system, per unit only, not the total, just per sound system. And very important, you have to round off to the nearest rand. Not always, only when they ask you. Right, let's do that question with this information. If I do, let's go to our answer page, and you can do this with me. If we are asked to do weighted average, we know it's a division sum. It is the opening stock, which is, as you can see, 51,300. I'm going to go back to the slide and highlight it for you. We have opening stock of 27, value 51,300. We have total purchases down here, 120, value 273,075. And then please don't skip these notes. All prices for purchases of stock, so this page, are exclusive. So we use it as it's given. And then in other questions, more difficult questions, and somewhere it will probably be asked when we want to test you on your knowledge of internal control or a lack thereof. There might be theft, but they tell us we've got good security measures, there are no missing items. So then if they tell you that, that's how it is. If they say nothing, we'll maybe be asked to calculate how much theft there was. Okay, let's use those figures now. I still have to add the 273,075, which is the 120 that I purchased. I have to remind you, you have to look out for returns, which will be a minus. You'll have to look for carriage on purchases, which will be a plus, as well as plus the customs duty. But there's nothing in this case. Okay, so that's just on the side. When we calculate, it's always good to put a subtotal down, and that would be 324,375, and at the bottom you can see it's 147. When we get an answer of 2206.63, please remember they wanted it rounded off. So our answer is 2207. Okay, and I did not say, but I looked at the marks also before I started so that I have an idea if it's going to be quick or long or easy or difficult. Right, I hope that was easy for you because you know that weighted average is a division sum. This could have been FIFO. Please be ready to do a combination of VAT with anything else. Okay. When they ask me in the periodical stock system to calculate the cost of sales, I know it is the opening stock plus purchases, and remember we just use those figures. Please, do you notice I first write my calculation and then I pick up the calculator. So it's 51,300 plus 273,075. I remind you, you would minus returns from purchases, you would plus, sorry, you can't see past my hand, you would plus the carriage on purchases and you would plus the customs duty, but in this case there's nothing, so I'm ready to subtract my closing stock. I'll just write stock up there in case you look at this and you're unsure what I wrote there, what I meant. Now when we minus closing stock, we know that what I get there is cost of sales. Now, when you write all these words out in the exam, I know you may be using time that you don't have, but you're welcome to just for yourself do some, I always do this. I say opening stock, purchases, carriage on purchases, customs duty, closing stock, so that I know that I've got the right calculation going. Okay, now our problem is we only have the 2207, which is of course for 1 unit. So let's just use the space at the bottom. It will be 2207 times the number of units that we've got left. For that, we need to go back to the slide. Take your calculator, please. Type in your 27 up there, plus your purchases down here, 120. And then you minus on the next slide the 115 sound systems that were sold. And if I do that, you can see here on my calculator, I've added the opening stock and purchases, that's 147, and I am now going to minus the 115 sold. I get 32. So if I times this by 32, I obviously get 70624. I'm writing with a thick black pen here. You'll be writing with a dark, sharp pencil. And then something like this, you can just maybe write 1.2. Then the teacher marking knows this is where you calculate it. So if we go back up to 1.2, we subtract the 70624. So my calculation now will start with 51,300, 273,075 minus 70624. So my answer for cost of sales here is 273. Oh, sorry, wrong. Focus, don't lose your focus. 253, especially if you're in a hurry. So I say you must work fast, but not too fast. Don't make mistakes. Okay, we've got that sorted. As I said earlier, we will probably be asked to calculate gross profit. So to calculate gross profit, we're going to take the sales, which is, please look at your info sheet. I'll show you the slide now. Let's show the slide first. Your total sales for the year amounted to 334,236, including VAT. Okay, have you got that? Watch out for the VAT now. So I'm going to go back here at the bottom. I'm going to show the teacher that in 1.3, I need to first remove the VAT. How do we remove the VAT from an inclusive amount? 100 is what I want. I have 115. That's how you do it. Let's calculate. It's 334,236 times 100 over 115. That would give me 290,640. And now it's quick. My sales figure, 290,640. Cost of sales, which will be worked with from the previous calculation, 253,751. And if you minus it quickly, you get the gross profit. I'm going to do the last calculation, which is another calculation on VAT. To just remind you, this is the first time we needed to think of VAT because we had to remove VAT from the sales. Now they say, calculate the VAT payable or receivable for March and April. Now let's look on the slide. We don't want these sales. This is for the year. We want to do the VAT information, okay? And also the opening balance. Now you know that in the VAT control account, it can be a credit or a debit balance. So how do we know what this means? Let me show you on the answer page. If VAT or VAT control is seen as a liability, which it is, then 5,800 would mean that I owe them. A debit balance would mean that they owe me. So then I would start it with a negative. In this case, I'm starting with a positive, which is 5,800. Back to the slide. We now do this, sorry, wrong one. There we go. We go to the sales for March and April. Again, watch out for VAT or watch out for inclusive, exclusive. Now, if we have 64,400 inclusive, we know that sales is output VAT. So let's do that. Go to your page, write down 64,400. I want the VAT. This question wants VAT. I have inclusive. And then you calculate. Okay. So 64,400 times 15 over 115, you'll get VAT of 8,400. Because it's on sales, it is output VAT. Back to the slide. Now we purchase. Now I'm going to do both. They give us purchases of stock and they give us other purchases. In this case, I need to go back to my info to find the April purchases, previous slide, and then here they say, I can claim back VAT of 2,100. So that's an easy one. I'll do the 2,100 at the end, but please notice they give me the answer. I can just minus it because it's purchases. But for this, I need to go back to the previous slide. Make sure you understand that is the only amount for March and April. I did not purchase anything in March, so I'm going to use the 73,800. And remember, they said here at the bottom it's exclusive. So on the answer page, 73,800 times, I still want the VAT, but I now have an exclusive amount, times 15 over 100. And then what I've got here is 64,400 times 15 over, 73,800 times 15 over 100. And that gives me a claim back amount of 11,070, as well as, remember, the other purchase. So these were purchases. And there's your answer. Let's see. 5,800 plus 8,400 minus 11,070 minus 2,100. There's my answer. So, because it's a positive figure, it's still output, as you can see, more than input. So I have to say payable to, not receivable by or from, it's payable to. Okay, that concludes our lesson or our revision of VAT. You must please do all three activities, go through the notes, and I hope your VAT question will be very nice and easy. I think it is good marks, easy marks that you can get as long as you practice enough.